US share markets rebounded in May, underpinned by a hot technology sector, solid March quarter earnings results, encouraging US inflation data, and a growing consensus that the Trump administration won't follow through on its most severe tariff threats. Investors were euphoric after a surprise de-escalation between the US and China earlier in the month put many of the new duties between the world's two largest economies on pause. The US agreed to adjust or remove 3 executive orders, which collectively put 115% tariffs on imports from China. Washington agreed to drop its so-called Liberation Day tariffs from 34% to 10% for 90 days and removed all tariffs imposed during the tit-for-tat escalation that followed. However, that still left China facing a 30% tariff once duties imposed before April the 2nd were counted. China matched the de-escalation, removing all but 10% of the tariffs imposed since April the 2nd, leaving the current rate at 10%. A trade deal between the US and UK also boosted sentiment, potentially paving the way for more agreements with other countries facing duties. Risk momentum ebbed after Moody's downgraded the United States sovereign credit rating from AAA to AA1 on May 16, citing the deteriorating fiscal outlook. Investor concerns over the Trump administration's sweeping tax and spending bill and its implications for the US debt profile undermine sentiment towards US assets. The bill passed in the US House of Representatives is expected to add about $3.8 trillion to the US federal government's $36.2 trillion worth of debt over the next decade. US government bond yields rose amid the fiscal worries, with the longer-dated 30-year US Treasury yield climbing to a 19-month high of 5.16%, just below its highest level since 2007. The benchmark US 10-year Treasury yield reached 4.63%, the highest level since February the 12th, increasing 24 basis points in May, its largest monthly increase since December. Higher yields can diminish the appeal of equities as they represent higher borrowing costs for companies and consumers while making fixed income assets relatively more attractive. Stocks were dealt another blow on May 24 after US President Donald Trump threatened to ratchet up his trade war once again. Trump pushed for a 50% tariff on European Union goods starting on June 1. The threat ruled global financial markets after weeks of de-escalation had provided some reprieve. But Trump later extended the deadline for tariffs to July 9 after European Commission President Ursula von der Leyen said that the 27-nation bloc needed more time to produce a deal. The trade uncertainty continued into month end as investors prepared for US President Donald Trump to battle a US trade court ruling that blocked most of his proposed tariffs. But a federal appeals court, however, reinstated Trump's levies on imports. In the month of May, the S&P 500 index rose by 6.2%, notching its best monthly performance since November 2023 and its best May since 1990. From the April 8 tariff-induced low, the US benchmark index rallied 19.7% through to the most recent high on May 19 and is less than 4% from its February all-time high. Atop the main US share index, NRG Energy soared 42.3% after announcing a $12 billion acquisition of LS Power's generation assets, with US power demand set to spike driven by artificial intelligence, crypto, and increased commercial and residential use. NRG is betting a big future on consumption in the Pennsylvania, New Jersey, Maryland interconnection market, a key electricity hub. Nuclear utilities also performed strongly, with Constellation Energy shares up 37% after US President Trump signed executive orders aimed at revitalizing the US nuclear energy industry in response to surging power demand fueled by the AI boom. The blue chip 30 stock Dow Jones index rose by 3.9% in May, boosted by a 24.3% jump in Walt Disney shares after the entertainment company's quarterly results topped Wall Street expectations. At the bottom of both the S&P 500 and Dow was United Health Group. The health insurer slipped 26.6% to a 5-year low following the Wall Street Journal's report on the Medicare Advantage fraud investigation by the US Justice Department. Regeneron Pharmaceuticals dropped 18.1% after the biopharma company reported inconsistent results from late-stage trials for its respiratory drug. Apple shares slid 5.5% after US President Donald Trump warned the iPhone maker could face potential tariffs on phones sold to the US customers but not manufactured in the country. The tech-heavy Nasdaq index gained 9.6% in May, its best monthly performance since November 2023 and its biggest May percentage gain since 1997. Shares of semiconductor giant Nvidia soared 24.1% in May after the company reported upbeat sales results driven by customers stockpiling AI chips ahead of US export restrictions on China. Electric vehicle maker Tesla jumped 22.8% after CEO Elon Musk said he's sticking with the company for the next 5 years, signalling a renewed focus on the company's operations and long-term growth priorities after ending his time with the US Department of Government Efficiency. The Aussie share market rose for a second successive month in May, with the S&P ASX 200 index up 3.8%, posting its best month since January. The benchmark index ended May at a 3-month high, up 14.9% from its most recent low on April the 7th. The Australian Labor Party won a landslide federal election victory on May the 3rd, with the biggest seat differential versus the Liberal and National Party coalition opposition since 1977. The Reserve Bank of Australia cut interest rates by 25 basis points to a 2-year low of 3.85% on May 20, as cooling local inflation offered scope to counter rising global trade risks and left the door open to further easing in the months ahead. Australian annual headline consumer prices held steady in April at 2.4%, though the Reserve Bank's preferred measure of inflation, the trim mean, increased by an annual rate of 2.8% in April, up from 2.7% in March. That said, swaps now imply a 70% chance of another rate cut in July. All 11 ASX 200 sectors increased in May. The technology sector was the strongest performer on the local bourse, jumping 19.8%, with the sub-index hitting its highest level since February, tracking the US tech-centric Nasdaq index higher. Shares of Life360 soared 51.9% to a record high after the Family Connection and Safety Company delivered better than expected sales and adjusted earnings for the first quarter. Technology One was another strong performer in May, with the enterprise software company shares surging 36.6% to an all-time high after its half-year pre-tax profit results beat expectations. Shares of Generation Development Group surged 34.5%, with the investment bond solutions company poised to benefit from Australia's prospective Division 296 tax law changes, which targets earnings on superannuation balances above $3 million. The energy sector jumped 8.6% to nearly 2-year highs in May, led higher by local uranium producers. Those which have operations in the US rose, with shares of Boss Energy and Deep Yellow up 25.2% and 18.5% respectively. The utilities sector was the worst performer in May, up just 0.3%, with shares of AGL Energy sliding 4.5%. The Australian power supplier announced that it had acquired 1.4 gigawatts of pumped hydro energy storage projects developed by former Australian Prime Minister Malcolm Turnbull's Upper Hunter Hydro in New South Wales. At an individual stock level, Nufarm was the worst performer in May. The agricultural technology firm shares hit a 23-year low, down 38.2%, following a series of analyst price target downgrades after the company reported disappointing first half year results. Judo Capital shares were the next worst performer, down 19.9% on a weak outlook, given economic uncertainty relating to demand for credit, funding costs and credit risks. Thanks for listening. For further developments on the markets, please make sure you subscribe to the CommSec YouTube channel and tune into the CommSec Market Update podcast. And you can also follow us on Twitter and Instagram.